Andrew, thank you so much for joining us. So Andrew, can you just review for us the trading day today, and what for you are the big takeaways? What trends are you paying attention to right now?
Great, Wally. Pleasure having you. All right, talking with you at the moment. The market today managed to stay positive, but of course, one of the key things we saw playing out today is lackluster performance in terms of volume and value of traded securities. I think that a number of investors have kind of slowed down given the momentum we saw in the last 2 weeks of December and into the earlier part of this month. So we saw some relative moderation in terms of those two key indicators that I mentioned. So index today played out 21 basis points up. With not so much regular stocks on the uptick. So that's a bit of what we had today.
Right. Okay, but what do you expect moving forward, though? And usually at the start of the year, everyone begins to put out their projections on how well the market is likely to do. But I think this year is somewhat different. We've seen oil prices recover, and typically that should be supportive for the equity markets in Nigeria. But on the flip side, we know that the central bank continues to struggle with how it's trying to deal with the shortage of foreign exchange in the country. We know that obviously impacts how foreign investors are playing in the market, and if we don't see that liquidity from foreign investors, we could see the markets trending lower. So all things considered, what are you expecting for the rest of this year?
Right. In terms of expectation and the extent of participation of foreign players, one of the key things or takeaways, from last year particularly, is the fact that the domestic market actually does have significant impact if it does participate fully. One of the key things that played out is that while we've witnessed significant outflows by foreign players, the domestic investors actually reject their momentum in the market. No thanks, of course, to the lower yields, in the fixed income space. So to that extent, and for as long as we continue to see the central bank maintaining the current stance with respect to interest decisions, we are likely to continue to see some traction into the equity space. And if that does happen, then the current momentum expectedly should be sustainable. So my take for the rest of the year certainly will hinge much more on the policy direction of the central bank, as well, of course, as the fundamental issue that, guides companies' performance. The other factor to look at, of course, is the dividend expectations from full-year results, which, of course, as you do know, we're already on the waiting wings. A number of those large companies, particularly the banks, are already closing up in their reports, and hopefully in the ensuing weeks we should be able to get some level of traction in that regard.
Right. Speaking of results, Unilever reported late Friday, and many will suggest very decent numbers, all things considered, especially if you consider the fourth quarter performance. But speaking to many analysts, I doubt this will be typical of this earnings season. What are your thoughts about the earnings season and its impact on the market's direction?
Interestingly, the performance certainly of Unilever that you made reference to, I do not think is a fair representation of what we are expecting, across board and across the different equity and industry spaces. So, if you look at Unilever itself in terms of revenue drive, yes, there was some improvement at full year, but of course the burgeoning cost, operative costs, and all that whittled down on that performance. And that actually reflected on the loss that, they posted at the end of the year. But if you look at the other segments of the market, particularly the banking stocks, we haven't seen so much indication, at least not as at the third quarter results, that should give us any significant departure overall. So dividends, I think, from that space are almost guaranteed based on, the reports we have up to third quarter. So to that extent, I think that a good number of other listed companies will kind of, maybe not necessarily excite the market, but certainly people will not be disappointed.
All right, Andrew, a quick answer to this. What do you anticipate will be the performance of the market this year? It was up 50% last year. I'm sure you're not going to give me anything close to that, but do you at least think that we'll have a positive close this year?
I wish I can actually tell you that we'll repeat what happened last year. But of course, again, you recall that the performance of the market last year, even given the closing figure of 50%, virtually took place towards the end of the year. The greater part of last year was, COVID-19 induced and laid low for so long. However, I do agree with you.
Right.
I don't expect a 50% acreage in the market, but I am positive that indeed the market should be able to post some level of positive results.
Let's leave it on that optimistic note, Andrew. We really have to end it there. Thank you so much for joining us. Andrew Tsaku is a trader with Kapital Trust.